All right. So from what I was explaining the other time, I was trying to let you understand that our when you're trading in lots, you know, the smallest is the 0.10 $10. So that means that when you use 0.01, that is the smallest. But we have 0.001 in binary on derif for V75, I think. So what that means is that you are using 0.10, 0.01. That means that you are trading with per pip. Market is going to move 10 cents per pip. So you can calculate, okay, if it goes against me 20 pip, how much do I steal that? So for me, one of the things I do for proper risk management, because when I started trading, this is what I do. I don't do it anymore, but I can advise you for a beginner to do it to divide your capital by 5,000. So this will help you know how much to use. So let's say that $100 divided by 5,000. How much is that? What is the value? Anybody want to help? $100 divided by 5,000. Don't worry about the size. I can rearrange it. Just divide your capital by 5,000. Whatever you have will be the lot size you should use. And you can just open one position alone and leave it. No matter how the market goes, it's going to take a long time before you lose all your capital if you trade by like this, you understand? But if you want to start using stop loss, I calculate
divide 100 by 5,000.
Then you can, and your risk management at top notch. Then you can, Mr. Anon, what are you doing here? This class is for beginners. I'm not looking for you here. I'll catch you. Anonymous trader. I'm seeing so many people that are expert traders here. I don't know what you guys are doing here. This class is for beginners class. But anyway.
How do you know that I am an expert?
Anon, I would don't let me cast you here. I know you very well. You're an expert trader. Anonymous trader. You are not anonymous like that. I will find you. I think I know the person. All right, guys, sorry. Let's just go out. Let's go out to class, okay? So this is what I do at the beginning, and then before I later move on to doing, using my instinct and then there is an application you can download or just go to Google. I think it's on XNS app. Is on. I'll find the link and send it to you guys in the group where you guys can, calculate how much you are risking per trade. It helps you to know. It helps you to know how much you want to. So let's take our trade from here now. So that we enter from here. Okay, from here, and then we are risking this, and then our TP was up here like we did. Can you see? So what this means is that we are doing a 1 to 5.6 risk to reward ratio. So whatever, let's say we are using a standard lot here. So let me see how many pip stop loss that we have here. This is like a 17 pip stop loss. Okay. So let's say we are using standard lot, and I said that standard lot is like 10 pips. The $10 is not that accurate for different PS. It's different, but it's always between the range of 9 to 10. Okay, so or 10, 9, 10, 11. Okay, 10 point something or 9 point something. So, but let's say that it is $10 per pip. Remember on standard lot. So and then we have $17, 17 pip stop loss. Okay, so what this means is that 17 pips stop loss, right? What this means is that when the market goes against us, we are 10 times 17, that's $170. So we are only going to be losing $170. Okay, we're only going to be losing $170. But if the market goes in our direction, now how many pips do we have here? How many pips do we have let's say market has gone in our direction to this point. Now this is 94 pips. Now what we are going to be having is $940, okay, that we would have made in profit if the market had gone in our direction. And we are using a mini lot, which is 0.1, and we have, and remember 0.1 is $1 per pip. Let's say we are using 0.2, so that's $2 per pip, and then $17 pip stops. So that means that 17 times 2, that's going to be 30. 7 plus 7, so that's $34 loss. Okay, so if you have a $200 account and you take a trade and you decide to, okay, I'm willing to lose $34 or $40, 34, you set it, and then $34, and then you're about to lose it. So if it comes back to hit your stop loss, that means that's a good night for you, or a good day. You go back and look for that trade, or you take a break, you rest. Why is it for sure? So you rest and then you do all of that. Okay, so but if you are going to go in profit, we have 94 pips here. So let's say $24, 94 pips, then that's $94. If it's 0.1, then 0.2, that's going to be 188 pips. Okay, that's going to be that's going to be $188 rather that you would have made. So those are the beauty of the stuff. But sometimes not everybody has the patience. See, the psychology is going to mess with you. Not everybody has the patience to wait for long-term trades, especially trades like this. I think I had some trade like that I waited out on, and then and then they did well, they moved well, and all of that. But not everyone has the patience, to wait out on trade. As long as they see small profit like this, well, they go out well. I want to advise you that as a beginner, that is the best way to trade. You don't have to wait out on all trade that you see. Any profit you see, you take it, because market does not wait for anyone. Market that is moving in a direction now can suddenly how to trade on MT5 and MT4. This is where you are going to come and analyze first. You understand? So MT5 is just for analysis, and where you call your trade. They're just for analysis and where you call your trade. You see? So these are some of my trades, and then where I entered, and sometimes you wait out on them, and sometimes I don't know. This is like a 1:2 risk to reward, 2.5, risk to reward ratio, and this one was lesser. This one was 1:7 risk to reward ratio. Okay, don't mind all my lines. You understand why I have them later on. You understand why I have them. What I'm going to teach you in the advanced class, guys, I'm not joking. I don't want to swear to God, but I'm not joking, you guys. That if you will listen and pay attention to, if you are going to be there, I'm not going to drop the recording. Trust me, I'm not going to drop the recording. You have to follow, because the recording is what I want to sell next year. I'm going to say to people, okay, I'm recording this video. Why am I talking about the selling in this recording? Oh, all right. Sorry about that, but I'm not in the recording. What I'm going to teach you guys is going to help your trading journey. Trust me, it's going to help your trading journey, and you see the charts clearer. You understand the market better, and you'll be able to make decisions that be able to make decisions. Good decisions. You'll be able to make good decisions as you go along in your trading endeavors. Okay, so not to worry. So let's go back to where were we? Euro GBP, right? Euro GBP too. So these are the things that you need to understand as a beginner. As you trade, you have to understand them, so that you can be a very great trader. You can be a good trader. For you to be a good trader, you must understand all these principles, and then these things I've just said briefly, you have to go and learn them. You have to go and pay attention to them. I'm giving you the other things that they are enough. Just you can go to babypeace.com to do more, but to learn more and understand more. But if you follow them the way I've been explaining, I think you should understand. You are following the way I've been explaining. You should understand some of these things. You should understand some of these things. Okay, so Yeah. So that is it about that. So we talk about pips. We talk about so pips is the differences, standard loads, and all of that, and all of that. Talk about candlesticks. Talk about the candle now. Let me show you what a candle look like. This is what a candle look like. This is what a candle look like. Okay. Let's put this. This is a bullish. No. Sorry. This is a bullish candle. Okay. This is a bullish candle. Let's give it some wick. Got some wick here. Okay. Why is it not wicking? Wick. And then it has some wick. Okay. And then this is a bearish candle. Okay. So this is a bearish candle. Okay. Just follow through. Forex might be boring. Well, actually, Forex is boring. Trust me. Forex is boring. Oh my God. Forex is boring. That is why you see traders are also boring people. Forex is boring, my dear. I need to tell you because it involves you doing the same thing every day. You know, so it can be boring at times. It can actually be very, very boring. But you can choose to, do something different. Okay, I just do something different. So this is what a bullish and a bearish candlestick look like. Can you see? This is bullish, as you can see, it's going up, and then that is bearish, as you can see, it's coming down. Okay. You can see the week. Now, what the week means is that the market was once there, like the way market moves, it moves up and down, ticking up and down, up and down, up and down. That is going up or it's coming down, go up and come down again, go up and come down again. All right, I will discuss about how to place trade. Okay, Sadiq, talk about it. Okay, so what it means is that market was once. That means that there was once upon a time there was a full body here. There was a full body here. Okay, once upon a time there was a full body here, but market rejected. Anyway, you see whenever you see wicks means rejection. That means the market rejected from that point and went back up. What it means is that this market, there was a full body here, a full maybe red candle, a full red body here, depending on where the market has opened. You understand? That's a full red body here, and the market dropped down. Okay. Now this is usually the open. So depending on the last candle, your last candle, the open of the candle from your last. Let's say that this is the open here, then this is the close here. Okay. The market closed here, and then a new candle started forming, and then started forming from here, goes up, then probably it closed here. Okay, it closed here. This is the close of the candle. Then a new candle might form. A new candle might form is somewhere around there, and then it starts going. A new candle might form somewhere around there, and then it goes up. Excuse me, and then a new candle forms again, and then keeps going up again, and then we have another candle that forms like this, and then the case of a bearish pattern, that was bearish. Okay, now in these two examples, I have drawn a particular candlestick pattern that you are going to have to get familiar with. Okay, it comes as a order block. It comes as an engulfing pattern, so which is something that you need to pay attention to. Okay, just follow me. Don't worry. I know it looks like I'm saying jargons. You understand as time goes on. So this is how the market moves. Okay, these are the candles. The bullish engulfing, the bearish engulfing. You see that it was the bullish one candle that engulf this, okay? Usually this is how it looks like. It comes and tests here, and then before it goes up like this, it comes and tests there and all of that. So this is how the market look overall. This is how the market looks. So whenever you see this happens, there's a bullish momentum, and then when this happens, that means that it's about to be a bearish momentum to the market about to start coming down, about to start selling, okay, and then it comes down and sell again, it comes down and sell again, okay, and then so that is this is how the market just moves generally. So from this point now, I want to teach you, I want to explain to you something that we call the time frame analysis, okay? The time frame analysis, how to best use your time frame. Now, time frames are very, very, very important aspects of trading that you need to pay attention to them. You need to pay attention to time frames. Time frames are very, very important areas of trading. You need to pay attention to them. Now, what are time frames? Why do we use time frames? Time frames. Now, there are different time frames on our trading charts, and what do we use them for? You know, time frames are like microscope. Are like our microscope, are the angles at which we see the market. Now we have different time frames. Now look at this side here. From here we have 1 month time frame. Some places you can see up to more than a month. We have 1 week time frame. We have 1 day, 4 hours, 3 hours, 2 hours, 1 hour. On the MT4, you may not see 2 hours and 3 hours. You're going to see 1 month, 1 week, 1 day, 4 hours, 1 hour, 30 minutes, 15 minutes, 5 minutes, and 1 minute. Those are the things you're going to see on your MT4, okay? But TradingView is giving us opportunity to see 3 minutes, 45 minutes, 2 hours, 3 hours, and all that, and seeing ranges, okay? Yeah. So what are time frames? Time frame help you to see how the market is doing overall. Let's pick another pair for me to explain. Let's pick NZD USD for me to explain this, okay? Let's pick another pair for me to explain this properly. Okay, I'm presently on this trade. I didn't take it, just analyzed it down and then to see no. Yeah. Okay. So now why do we have time frame analysis? Why? What is the importance? What is the importance of time frame analysis? Why? I didn't take this trade on the real account, but I just analyzed it, and it's been moving, and so far so good. It has done how many pips now? It's only sitting on 28 pips, 27 pips, 17 pips. Okay, not a bad one, actually, not a bad one. So now this is a 4-hour time frame. Now look at. Can you see this? My trade. How many candles do we have here? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Obviously, I took the trade on the Friday, I guess. 10, that's 10 candles, right? Inside that 1 box. Now, if you go to a monthly time frame, you go to 1 month. Now, see that my stuff is not even really showing properly because because 1 month is a large candle. It's not even showing. It's not even showing there. Not even showing at all. This actually, guys, this pair is going to be bearish for a long time. From the look of things from here, this pair is going to be bearish for a very long time. Even after the close of this month, it's going to be bearish. Now it's not even showing but what this means is that each of these candlesticks you are seeing, it took it a month to form. This one took a month. As you can see today, this is September now. This is November. We look downward, this black one below. It is showing November, October, September, August. So that means that in the month of November, this market was bearish. In the month of October, it was bullish. The month of September was bearish. Okay, so what it means is that, you know, time frame means that how long does it take a candle to form. So that means that on the monthly time frame, one candle is a month. So let's go to the weekly time frame, guys. Follow me. Don't worry. I know that this first will be boring to you. Now look at this here. Now, finally, my stuff is showing on the weekly time frame, and it's only showing one candle. What this means is that each of these candlesticks is taking them just 1 week to form. It's 28th December, 13 December, 06 December, 29 November. So it means that each of these candlesticks only took it 1 week to form. So you go to your daily time frame. Now, this is how you trade. You start from beginning to the lesser. You want to see how the market was. But the market was once here for me that day. It came very low before it started rejecting. Well, I'm still holding it on my trading view. So that means that each of these candles, this is a daily time, each of these candles formed per day. You understand? So that is how you view the market. So 4 hours, okay, this is how you do it. So most of the time, what you go and do, depending on the kind of trader you are, it can be a swing trader or a position trader or a scalper. So who is a swing trader? A swing trader is someone that leaves trade for days, possibly weeks, if possible months. But scalper is someone that enters the market and scalp within minutes, 10, 15 minutes, 1 hour, they are gone. An intraday trader is someone that leaves trades for hours, sometimes days, few days. Intraday traders, just you're in, you're out. You just so, but people that trade most of these stores, because in Forex, we trade something that we call supply and demand zone. We trade something that we call liquidities. We trade something that we call RIP. It's called institutional reference point. So that means that you are going to be, so how do you trade successfully and accurately? And one of the things is you go and look for major zone, because when you come to smaller time frame, now look at this 4 hour now, the last few candles. If I go to 15-minute time frame, you see that there's going to be so much noise, so much. Can you see how many candles we have on 15-minute time frame? It's just noise, and there's just noise and noise and noise, nothing precisely, just noise. Okay, so what we do first is to go on our higher time frame. For me, I use 4 hour time frame and 15 minutes for my entry, 4 hour for my zone discovery, or 1 week, or daily time frame, and then analysis, and then I take my entry from the smaller time frame. And as you can see, this zone was drawn on the 4 hour time frame, and then I looked for an entry on what? On the 15-minute time frame, and that is why I found myself here. So time frame is that place where you correlate your trades together. You have to find your balance. You have to find that place on higher time frame is where you can really see the market without so much noise. You see the market for what it really is. How far has it gone? How far has it moved? Please 1 minute. Thank you, guys. Sorry. Now, you want to see the market from where it is, and you being able to see the market clearly helps you to make right decision in your trading. Helps you to make right decision in your trading. How do you trade? What are you trading? Okay, so these are the few things that you need to pay attention to. So you don't need to actually be on every time frame. You can just pick 2 time frames, 4 hours and 15 minutes. 4 hours for your major zones, 15 minutes for your entry. To locate your zones and 15 minutes for your entry, you can pick 1 month and 4 hours. If you want to be a swing trader, you can pick 1 day, the daily time frame, and the 1 hour time frame. To pick daily time frame for major zones, 1 hour for your entries, depending. You understand? You just have to correlate. You can take entries on 4 hours too. You understand? This entry, I think I took this entry on 4 hours. I don't know, but I was sure that I saw something good on 4 hours time frame, and then I did something with it. Okay, so I love 4 hours time frame. So you have to You have to find your own time frame, but majorly you find the major zone starts from 4 hours to daily to weekly to the monthly. So when you find your major zones, now I'm expecting the market to react to those positions, to those zones. Now I'm expecting the market to react to this particular zone when it comes up here in the what? In the future, okay? Now, my tip is going to be somewhere around the actually this trade. Guys, go and take this trade. Go and watch. I think you should take it. Go and watch for this trade. But my tip is going to be somewhere around here. Actually, it's going to sell to this point. I am 60% certain that it's going to sell to that point. Why? Because structure has been broken. Don't worry, we're going to do that tomorrow. We're going to or in the advanced classes next year. But tomorrow is for our I'm going to be teaching on the institutional concepts, something you need to understand and something you need to take note of. Okay, so let me stop for here tonight and let me entertain any questions that we may be having. Okay, so do we have any question? Do we have any questions? Anybody that's having a question for me? Do you have a question for me? Let me get to answer them now. We have 10 minutes left, guys. So any question, quick, so that we can answer them. You said what? I can't hear you, please.
One question.
Hello, I can't hear you.
Okay, yeah. Can you hear me now?
Yes.
You know, when we open TradingView, there are different places where we can locate our charts, as in Rwanda, FX, source, and when you notice sometimes those candles doesn't appear the same. Sometimes the last candle in Rwanda may be bearish, and that of those maybe FXM or other stuff may be bullish. As in, if you understand what I'm saying. So which one of those?
You can use Rwanda or FSTM. I think FSTM also. Yeah, you can use Rwanda or FSTM. It's a broker
on the system.
So FXCM, Rwanda or FXCM. That was I use Rwanda or FXCM. It's a broker thing. It's a broker different. So it's not really a serious issue. No, but Rwanda is better or FXCM. So those are the ones that I use, and they are not really don't really give me. If you can't talk, you can just drop a question as a test in the Zoom comment section, so I can answer them. And don't worry about just this is how to enter TradingView. Just open your chart. TradingView. Just click TradingView. Please don't draw my screen. Thank you. TradingView. Just click on TradingView, and then when you come here, just go to chart. Okay, go to chart. It's going to take you to your stuff. If you have not signed up or logged in, just sign up your name, email, blah blah blah, blah, and then it's going to bring you here. Then the moment you have a login, you can always go to your charts. Any chart anywhere you left it, you are going to get back to it the way you have left it. You understand? Just go there, and all these things are things that you can just mess around with it to create a good background for yourself. Just right click, it's going to bring you options. There's a setting button. I see the setting button here, and you can change many things as you want. You can play with all these tools. Click on here. This is to add to your wish to your watch list. Add pairs that you just want to focus on. So those pairs are going to show you that you can click on them anytime that you want, because this is my own account. So it brought me back to my own account, which has been logged in already. Then you can create a tab like this, something like this, where you can keep major things that you use. One of the things you are going to be doing is a rectangle like this to draw to highlight out your zone. This is for you to put on a long position on a short. This is long position. This helps you. This is where you're going to see that. You're going to see that. No, not here. Here. No, not here. So here you can see trend line here. You can see the arrow, the ray, info line. These are the ones that you use to draw your lines. Okay. long position is going to be here. So you can pick your long position. The moment you start it, if I should start this first start now, you can see that that's joined this list of panel. If I should start it, it's going to remove. See, if I should start it now, all you need to do is just start it, to put it at your favorite, so that you can always, you can be somewhere close to you. You need your trend line. So all you need to do is to come here and start it, which I did here. Can you see? Start it. If I want to start my arrow, I can start it. Okay. So you understand, and I can shift it, move it from wherever I want it to go. Change your background colors, change your candle colors. Just right click, you can go to settings. If you want to remove all the drawings now, you just click on remove drawings. It's going to remove everything. Then reset your chart. Then you can go to settings, set anything you want to set, change your colors, change what you want to. Just go around them. This is the symbol. So this is the color for the symbol. This is your appearance. This one is for your background. And you can take a screenshot of this the way it is. If you want to copy my background, so you can take a screenshot of it. So I'm going to be waiting. You can start to put watermark so that it's going to be showing the stuff in the background. And it's like showing Euro GBP in the background. It's showing Euro GBP in the background. And I have to put my name. There are so many things you can do, and this is where you set alert. So set an alert, maybe buy alerts, create an alert. We are waiting for. So I will first I'm going to start talking about tomorrow is what's it called? Type of orders. We have buy limit orders, buy limit, instant market execution. We have the buy limit and the sell limit orders. We have the buy stop and the sell stop. I'm going to start with that and then move on to explaining to you price action, some candlestick patterns that we look at for in the markets. Then from there, move to explaining to you other blocks, liquidity, what else? Zones, identifying your zone, and all of that. I'm going to make it very short as possible so that you guys can have the best, you can enjoy it, and then you are not bored. And then when you have questions, you can come to me and then I'll answer them. Okay, so is there anything I've not talked about tonight? Is there any question? I believe you guys understand everything I've explained to you tonight. Let's go through all of this stuff and then you discover that you're on a journey. You have not reached the good part. The good part is coming, and I'm so excited about it. The good part is coming, and we're going to enjoy it. I'm going to show you what market is all about, what your market is all about. How to be profitable. Okay, how to be profitable in the Forex market. Okay. All right, guys. I think that is all for tonight. That's going to be all. Thank you for joining. It's been a privilege. It's been a beautiful opportunity to have you. Have a wonderful time. Take care of yourself. Good night. Good night.